Good evening, everyone. I hope you're all having a wonderful start to the week. It is Monday, March 13th. We're going to be breaking down the E-mini futures contract. We're going to be looking at the monthly, go into the weekly, look at our daily time frame, and lastly, break down the 30-minute time frame. Now, you might see a little bit of disconnect between the futures continuous contract that TD Ameritrade provides for us and the actual June contract because we had rollover. We rolled over from the March, and now we're trading the June contract. That's just how it goes. So there's gonna be a little bit of disconnect in the way the chart, or not the chart, but the numbers. Everything still applies and is going to be the same whether we're one time framing down or one time framing up or in a balance. So you just might hear a little bit of difference in the numbers. However, nothing changes. We are still in a 4-month balance on our monthly chart, three multi-month balance in the larger picture. However, like I said, I've in past videos, I have a monthly extreme balance high now of 43.2750, extreme balance low of 35.02. 4-month balance still hanging in there, right? Balance high of 42.0850, balance low of 37.8850. We are getting dangerously close to it. And if we break that, I do expect us to go and get this monthly low from November and then go and test 3502, 3500 level. With everything that is going on in the markets and the big bank scares that are going on, this is the third largest bank failure, I believe, to occur. And it's kind of crazy that I'm seeing all these things happen in my lifetime. Being in your mid 20s, and then living through the COVID times, and just now getting involved. I've had a lot of stuff happen in the short period of time that I've been in the markets. It's just crazy to think that it's all these things are happening. Anyway, so with the bank failures kind of scaring people, and then we have the CPI tomorrow. We'll kind of see how much of an effect that has on the market sentiment. I do think in the bigger picture, though, the banks and with the Silicon Valley Bank, trying to find a buyer for that is uh, kind of stalling things for us a little bit. We're trying to see how much of an effect it will have on the rest of the banks that are out there. There are some analysts that come out and said a la-di-da, la-di-da. No matter what, we got to trade what's in front of us. And right now we are in a large balance on the monthly. So no matter what the news, whether it be CPI, the banks, etc., they may have a little bit of an effect in the sense of a catalyst. However, you got to trade what's in front of us, and right now we are in a balance. Sorry about the rant. Let's get into the weekly. And once again, my mouse is still broken, so I gotta click on things. So weekly is one time framing down. We are one time framing down. Let's see, 2 weeks now. Last week was an outside week down. We want to see if we get good continuation to the downside for this week. So we are one time framing down on the weekly now as we broke the balance low and then continued past through that balance with an outside week down yet last week. Pretty nasty into the week. We come into this week looking to see if we find continuation. So far, we took out last week's low, and we're looking to continue lower. You want to see us get past the 3,800 level. You get past that, you will continue to move down lower into that monthly balance at 37.8850, which is that weekly low here. So you want to see us continue to one time frame down, continue to take out weekly lows, and set lower lows. If you are a seller, if you're a buyer, you want to see us hold here and maybe take back some of the trend. And like I said, we got CPI data coming out tomorrow, so that may have an effect on how we trade. All right, now let's go ahead and look at our daily chart. Daily continues to one time frame down. This is going to say it's an outside day up. However, we did not actually take out the previous day's high. That did not occur. It did on the March contract, but in the June contract, we did not take out that daily high. And this is where the disconnect kind of steps in. But So far, the daily is one time framing down now. We've been one time framing down 1, 2, 3 days in a row now. Today, we didn't get much extension to the downside, but we did have really good volume today, as this was the third heaviest volume day of the year. We look to continue to find that. It's provided a really good range and pretty fast moving market. So if you're not playing with stops, then you more than likely are getting hurt. So if you're out there trading, I recommend trading with your stops in place because it will help you. But we are one time framing down, setting lower lows on the daily. One thing to note, we are back testing that downward trend line that we've had from last year, right? That lower high trend line. We're getting below it. Excuse me. Sorry about that. But we're getting below that. We may look to back test the 200-day moving average. Like I said, we're below it, close below it 2 days, 3 days now in a row below the 200-day moving average, but that does not make a market. We need to see if we continue to find acceptance down here or if we'll rotate back up above it. Right now, you got the 20 moving over the 50-day moving average. Let's see how much of an effect that has on the market with those people that trade based on that. Let's go ahead and look at our 30-minute profile. This is the June contract that we're looking at. I did back adjust a little bit. I did not back adjust a whole lot. I only went back as far as what was it, 1, 2, 3, 4 days. 4 days, because above that it kind of gets a little choppy. So 4 days time is about as far as I've back adjusted these numbers. So this is what we're looking at as of now. This is the June contract, ESM 23 on TD Ameritrade. So if you look here, we opened up with a gap. I forgot to mention that. We did open with a gap, this being like the umpteenth time that we've opened with a gap to either the downside or the upside and then did not hold it. There are only, I believe, 4 days that have held an actual gap out of the like 43 trading days that we've had. So very low percentage. So anytime we open up with a gap, you can more than likely fade it to fill the gap. However, with things being as sketchy as they are, you never really know. But we opened with a gap this morning, an A period in the first 30-minute time frame. We filled that gap, got back into the previous day's range, and then continued to grind up higher with large volume and range pushing this thing all around. We one time framed up A, B, C, D, E, and F period, and then F became a reversal bar after setting a new high on the day. One thing to note, we got into that afternoon rally high, but we couldn't quite find acceptance above it. That's kind of the line in the sand there for us, is the 49 or 39, 25, 22 area. As every time we got above it, we couldn't really find much acceptance. That's where change took place on that day, where we decided to go trend down. Can't really find acceptance above that area. After F had a reversal bar, G period, and H pushed down, liquidated pretty good. I got hurt on a couple longs. I did well early on in the day buying on dips when this market pulled back, and it pulled back in quick fashions. Like, I mean, it was moving in about 10 to 12 point ranges, and either to the downside or to the upside. So you had to be quick getting in and then quick to get out. Today was not a day to get in and stay married to the trade. You wanted to scalp out of your trades, because if you were somebody that held, you probably got hurt or stopped out if you had it too tight. And that was kind of my case late in the day as we started to pull back, and I got into a position, did well on one, got into another position on the pullback. I got stopped out, and then I should have realized something was changing after I started getting stopped out multiple times in a row. Continued to pull back. I tried to get long again as I was seeing a little bit of stall in the tape. Got in, got stopped out as I was buying against VWAP at the time. RTH VWAP was right around the 3,900 level. And I was, looking for us to have like an afternoon pullback low and rotate back up to the point of control, which was right around the 3,907 level. So that's what I was looking for. We didn't quite do that until late in the day after I'd been stopped out multiple times on the pullback. And I got long quite a few times and ended up taking an L on the day. Not enough to hurt me, but enough to just kind of put a damper on the way you want to start this week. I mean, I was up really well at the beginning, and then I wasn't paying attention to the MGI. I was kind of getting caught in the shorter time frames, looking at that and taking longs based on the shorter time frames, and not realizing that this market was still trying to move down. I should have waited until we opened up in I period, couldn't take out H's low, and then attempted a long there. However, it provided a really good opportunity to relieve some short pressure, rotate this thing up higher where you could have shorted against the day. P shape to go out with, as it does look like a P, right? If you look at it, it looks like a P, the letter P. So P shape on the day where we pulled back and took out the afternoon pullback low. So all we go out with today is the low of day, the high of day, and then a 9 wide point of control. And we're going to call that 9 wide point of control right here at 39.0775. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9 time frames that pass back and forth through that 39.0725 area. So that would act as a magnet tomorrow. So yeah, let me go ahead and mark these destinations on the chart for you guys. I'm going to kind of no, we'll get rid of that. All right, let's mark the destinations real quick. We got today's high day, 39.40.50. 39.40.50 is today's high of day on the June contract. So we'll mark that bad boy. Boom. We're going to mark our 9 wide point of control here at F's low of 39.0775. And if you don't know what I mean by the time frames and how I'm labeling them, it goes A through M. Each 30-minute time frame starts with a letter, right? So the first time frame is A, seconds B, C, D, E, F, G, H, I, J, all the way until M period. That's how you kind of label them, just so you understand what I'm talking about. Normally I have them marked on the chart. Today I did not do such a thing. So I'm trying to make this video quite a little bit quicker than what I normally do. So we got a 9 wide point of control. Nine wide puck. Oh no. What happened? Oh no. If I could type, that'd be cool, right? Alrighty, and then we're going to mark our low of day down here at 38.40.75. One thing to note also is we did not take out either side of our overnights, our overnight high or our overnight low. We did not take out either side. So it's kind of chop in between that, as it was a pretty large range and we didn't really get it. So there you go. There's our destinations. So if tomorrow we open up inside today's range, below the 39.07 level, let me correct that, 39.0775. If you open up below the 39.0775 level of F's low, you will look to either take out today's low at 38.4075. If you can't do that, you'll rotate back up into that 39.0775 level. If you open up above that and you can't take out the day's high to stop the one-time framing down, then you'll look to take to trade back into the 39.0775 level, which I expect to happen if CPI is a dud and volume kind of dies down. However, if we get above 39.0775 and take out the day's high, the next destination is 39.775, and then the single prints that lay above at 39.7450 to 39.7775. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. If you don't mind, leave a like below and comment if there's anything I could do better. If there's something I can explain better, holler at me, let me know. Hope you all have a wonderful day, and we'll catch you guys in the next one. See ya.